to Market Cafe. Good morning to everyone. I'm Ankita Saxena and with me is Kanishka Sarkar. In the next 1 hour, we'll take you through what transpired in the global markets and what are the cues to watch out for before today's trading session. But first up, Kanishka, take us through how the Wall Street fared. We were seeing, those record high levels on Wall Street. But yesterday, the market moderated a bit, even though the focus still remains, of course, on the news coming in on the tariff front and the earnings.
That's right, Ankita. Very good morning to you, first of all. But like you said, it was another day and another record close that we saw. Now, the S&P 500 and NASDAQ, they hit fresh all-time highs again on Monday, with the NASDAQ up about 0.3%, whereas the Dow, that slid 0.1%. Now, this marks the 15th record close for S&P 500 in 2025. Now, remember, markets are reacting to a new US and EU trade deal, which includes 50% tariffs on most European imports, including cars. Now, President Trump has also signaled a global tariff rate of 15 to 20%. Now, remember, investors are eyeing further deals, especially with China, ahead of that August 1st tariff deadline that's looming. The talks did resume on Monday in Stockholm. However, we are yet to get the final details. Meanwhile, the Fed's rate decision, that is due on Wednesday, with rates expected to stay in that 4.25% to 4.5% range. And it's also the biggest and busiest week of earnings season in the US, with over 150 S&P 500 companies reporting their numbers this week, including the likes of Meta and Microsoft, which will report on Wednesday, followed by Amazon and Apple that are going to report their results on Thursday. So that's how the US market setup is looking like, Ankita. But how are things on the crude front?
Kanishka, thank you so much for giving us a check on as far as the Wall Street is concerned. But let's take stock of how the crude is shaping up. We did see a jump up of 2% coming in on crude. Now remember, Brent crude is sitting at $70 a barrel. Now, we had the trade deal with US and European Union, and the US president, announcement of a shortened deadline for Russia, to end its war with Ukraine of a sanctions. On the back of that, we did see a jump up coming in crude. Crude futures also rose $1.6, which is 2.34% coming in, and that closed at $70 a barrel. The WTI also gained $1.5 or 2.38%, to settle in at $66.7 a barrel. Now, Brent crude had touched its highest price in the last 10 days, of course, after Trump said that he would be reducing the 50-day deadline that he gave to Russia over ending the Ukraine war. Now, the deal between European Union and US is also a possible extension of the US-China tariff pause, also supporting global financial markets and oil prices. So oil prices did see a jump up coming in. In fact, it has hit more than a week high, in yesterday's session. Brent crude has touched the $70 a barrel mark for now.
All right, so that's how the commodity market is shaping up. But let's move on and take a look at how Indian markets fared in yesterday's trading session. Now, the new week did start on a sticky note on the Lal Street. Nifty shut sharp below that 24,700 mark, and broader markets, they also ended the day in red. Now, let's go to Snehi to get us all the market action from yesterday's trading session.
Well, yes, yesterday we started the week on a very muted note. A very tepid note coming in from our markets yesterday, because we've only been consolidating, and the sell-off on D Street continues because the shade of red is what we've seen across the benchmarks as well as the broader end of the market. For the Nifty, we fell almost 200 to 250 points from the day's high, and 150 point cut coming in on the spot basis on the Nifty yesterday alone, because Nifty has closed sub that 24,800 or 700 marks, so 24,680 to be precise is where we have shut sharp. Almost a 0.6% cut coming in on the Nifty. Slightly more cut coming in on the sensex. Nifty Bank too was losing in yesterday's trade, largely on the back of the 7.5% cut we've seen in Kotak Mahindra Bank on the back of weak set of numbers coming in and brokerage downgrades as well. The management commentary also did not look very optimistic. So that's the take on why Nifty Bank was not doing very well in yesterday's trading session. The broader end of the market to mid cap and small cap, they saw a sell-off that was more than the benchmarks yesterday. In fact, the small cap has also ended with losses of about 1.5% intraday itself yesterday. So that's the take on the broader markets as well. It was a big spike up of 7% on the Wix, back once again above the 12 mark on the Wix. So that is how the market construct has been yesterday. It was and Shriram Finance that continued to gain the leads on the Nifty, although there was only a select handful of stocks that were in the green. On the flip side, of course, Kotak Mahindra Bank, IndusInd Bank, Asian Paints, all of them have closed in the red yesterday. Some other stocks to watch out for: Laurus Labs on the back of brokerage upgrades coming in on the back of individual land acquisition news flow in Andhra Pradesh and their capex project as well. Emphasis was another stock that did well on the back of brokerage upgrades coming in. Those are some stocks we wish to highlight. But when we spoke to our experts yesterday on closing trades, Aditya Agarwala believes that today we could see a 24,500 mark on the Nifty, a slight bit of a gap down open with a little cool off on the wicks. So a tepid open with a gap down followed by a 100-point short covering on the Nifty. And Sharan, our in-house expert, believes that 24,500 is the levels that we could test today. So all eyes are going to be on how the Nifty performs in today's trading session, given the absolutely lackluster show we've had for the past couple of weeks now.
Alright, so those are the cues to watch out for before the trading session. But let's go over to my colleague Pulkit, who's joining us. Take us through what is the market setup for FNO looking like. Pulkit, take us through the FNO setup.
Good morning, Ankita. If we talk about the FNO setup, and let's start with the India VIX. India VIX has increased a bit and it has closed around 12.06. Now, if we talk about PCR changes, that is the put call ratio. For put call ratio for Nifty, it is around 0.52, and for Bank Nifty, it is around 0.59. If we talk about the index futures change in open interest, for Nifty, it is minus 7.83%, and the activity was long unwinding. For highest open interest in any strike price, for put it was 24,000 and for call it is 25,000. For Bank Nifty, the change in open interest for index future, it is around minus 9.5%, and the activity was long unwinding. For highest open interest in any strike price, for put it is 56,000 and for call it was 57,000. If we talk about the FI long position, it has increased a bit and closed at around 14.6%, while in the previous session it was around 14.29%. Now let's move to the FNO band shares. So only one share is in FNO band, that is RBL Bank.
All right, thanks Pulkit for that FNO snapshot. But moving on, let's now get on board Kungo, the head of Asia Research at ANZ, to join us this morning to decode what the global market setup is looking like and how exactly are Asian markets expected to react to the tariff deals as the deadline for August 1st looms. Hi, Mr. Go. Thank you so much for joining us this morning. A very good morning to you. Now, let's start by, of course, talking about tariffs there. Now that August 1st deadline is looming, what are your expectations when it comes to deal with, Asian countries like China and India about signing off that US tariff trade deal?
Yeah, good morning. The 1st August deadline is looming large this Friday. My expectation is that if countries are yet to secure deals by then, I think it's very likely we might get a further extension to buy more time for deals to be sewn up. So far, the US has really only announced deals with 6 countries, and there's plenty more that continue to negotiate. And in the case of India, there was initially hope that India might be one of the first to secure trade deals, but to date, we're not quite sure how close to the finish line both parties are. I think there's a good likelihood that some kind of extension can be granted in order to finalize the trade deal with India. In the case of China, another major important trading partner for the US, they are on a different timeline. So US and Chinese officials are in Stockholm this week for talks. The word is that there will be a 90-day extension to their 12th August deadline, buying a lot more time for both countries to hash out a more comprehensive trade deal. So overall, the way markets are responding is expectations that there's not going to be a sudden escalation in tariff tensions this Friday, that the US will allow more time for more deals to be done.
Right, Mr. Go, hi, good morning. This is Ankita also joining in. Mr. Go, the deal that Japan has struck with the US of a 15% tariff, is that going to have implications or a certain pressure on other emerging markets to have similar kind of deals?
Well, it will provide a sort of a template or a benchmark in terms of what kind of deals other countries can get. If you look at the announcements so far, it looks like we're gonna settle within a 15 to 20% range for deals. Now this is if you look at Japan, for example, or even the EU, both of them have been levied with 15% tariffs, despite both being very strong important allies of the United States. Despite that, they couldn't get below 15%. So that tells you that there's quite difficult to get below that 15% mark, particularly if you haven't been hit with the minimum 10% baseline tariff already. For the rest of Asia, if you look at Vietnam, Philippines, and Indonesia, they've been hit with 19 to 20% tariff levels. So again, that tells you that for other Asian economies, it's very likely that 20% could be the ceiling. Of course, they'll all try to negotiate it down towards that 15% mark. I think that's something that India will be hoping they'll be able to settle at. But we are getting a lot more clarity around what kind of range that President Trump will be willing to settle on.
That's right. So like you said, 20% could be the ceiling for Asian economies that are yet to get trade deals. But, Mr. Goh, given the performance of Asia Pacific markets, it's largely been mixed. What is your expectation when it comes to key indices in the near term leading up to that tariff deadline on August 1st? One is that, and the second thing, of course, with these tariff deals, US is looking to strengthen its economic position. So once that happens, and if that happens, what's the likelihood of capital outflows from Asian economies?
I think we have to look at it in two parts. Firstly, there's the announcement effect. As we've seen clearly in the case of Vietnam and Indonesia, when the deals were announced, we saw their local equity markets responding very, very positively. In fact, the Vietnam equity market just hit an all-time high yesterday. And it's really the removal of uncertainty more than anything else. Yes, a 20% tariff level is still very high compared to what it was before, but it's really removing that huge element of uncertainty, businesses knowing what they're facing and being able to adjust. So the initial announcement effect is that. I think further down the track, though, this is where how it really starts to impact on economic activity, how much it starts to slow growth. That's where we'll see the next stage in terms of investors trying to anticipate and factor that into asset markets. I think we're not quite there at this stage yet, partly because we're still in an environment where markets are more breathing a sigh of relief that the worst of the tariff escalation is not proving to be a reality. We're settling towards a tariff regime that probably is more acceptable. So that's something that markets are responding more positively to. And on top of that, I think there's also expectations that the U.S. Federal Reserve will also be looking to signal that they are getting ready to cut rates in September. So I think that's something else that is helping to short markets for the time being.
Right. Thank you so much, Mr. Goh, for joining us and weighing in on the outlook for the markets and the tariff deal going ahead. On that note, let's move on and take a look at all the stocks that are going to be in focus in today's trading session. For that, we're joined by Varun, Sharad and Shrishti, all three of them. First up, let me come to you then. Varun, take us through all the stocks that you have picked out for us, the stocks that will be moving in trade today.
Well, so let me start with IndusInd Bank. The company has reported its quarterly numbers and it's a mixed bag. Because if you look at the NII and also the PPOP, that is better than what we were expecting. Although the profit has come at around 604 crores, which is far less than what we were expecting. The net interest margin of the company is around 3.46%. We were expecting it to come at around 3.2 to 3.4%. So it is better than what we were expecting. But the deterioration in asset quality is far more than what we were expecting. It has come at around 3.64%. The GNPA numbers, we are expecting it to be at around 3.1%. So the overall deterioration is around 51 basis points. So this is a point of concern for the company. And also if you look at the provisioning on a year-on-year basis, it has gone up by around 68%. The management has said that the financial implication of the previous issues are now behind them, and also the appointment of the new CEO and the pace of business recovery will be the key thing to watch in the coming future. Other than this, it is Torrent Pharma. The results for this company are good because there is improvement in the US business and also in the Brazil business. Overall revenues have gone up by around 11%. Also the profitability has gone up by around 20%, and there is a good margin improvement from 31.6% to around 32.5%. Though overall domestic business has grown by around 11%, Brazil business has grown by around 16% in constant currency growth. There was disruption in the German business because of supply chain issues. Other than that, if you look, there was a good performance. It was strong performance in the overall branded market, and also the company has said that it has launched the generic version of Entresto in the US markets. You also have Adani Total Gas. Overall results are good because the overall volumes have gone up by around 16% on a YOY basis. The revenue have gone up by around 21% on a YOY basis. Although the PAT has seen a slight decline of 8%, the PAT number has come at around 162 crores for Adani Total Gas.
All right, thanks, Varun. So, IndusInd Bank, Torrent Pharma and Adani Total Gas are the counters we will be tracking on the back of earnings. But Sharad, now coming to you, you have also picked out several earnings counters for us. Mazga Dog, Gale and Arvind Fashions are the ones on your list. How have their numbers been?
For oil and gas major GAIL, the numbers were largely in line with what the street was estimating. Certain operational parameters were mixed as well. The company also announced a 10,700 crore capex program for FY26 as well. Interestingly, the net revenue jumped 2.6% on a sequential basis, but the margins that went up by almost 58 basis points. Up next is Mazgaon Dock. Weak set of numbers coming in and the margins contracting by more than 15% for Mazgaon Dock. It's likely that the stock will have selling pressure in the opening trade. Now, the EBITDA also fell by almost 53% on a year-on-year basis, while the net profit also took a clobbering of 35% degrowth. Also, Arvind Fashion, strong operational numbers coming in and overall beating all the analyst estimates as well when it comes to the numbers. The net profit saw almost a 9 times increase, where the margins, however, were almost flattish, coming in at roughly 12%.
Right, Shara, thank you so much for your picks. But let me come to you finally, Shrishti. Tell us what are the stocks that you want us to keep on our radar before this, the trading session starts?
A lot of earnings indeed. Firstly, let's talk about Paradeep Phosphates, because this time around the company did come out with a strong Q1 wherein we have seen a revenue jump of 7.5% in 3,754 crores is what the company reported on the top line. The net profit has seen a jump of 60% on a YY basis, while even the EBITDA margin that has seen an uptick from 9.9% a year earlier and 12.4% is what the company reported this time around. So an improvement across the board is what we have seen in the numbers. Other than that, news flow coming in for TCS, wherein as per our sources we are getting to understand that the government is officials are keeping a close watch on the matter with respect to the layoffs, and the company is in touch with the ministry officials to foster the understanding on the matter, compulsion for the layoffs as well, because do remember TCS and some of the other IT majors were actually down in trade yesterday on the back of the news flow that 2% of the global workforce will be let go of when it comes to the IT major. Some counters within the power space, and specifically with respect to the solar power companies that will be in focus. Case in point being Tata Power, Adani Green as well as solar power producers, because mandatory use of ALMM listed solar PV cells to begin 1 month after the list publication. That is the news flow that we are getting to understand, wherein ALMM is approved list of models and manufacturers and the companies have to comply with this particular norm. And lastly, ONGC within the oil and gas space will be in focus today, as we are getting to understand that the company and BP Exploration and Reliance have a joint operating agreement for an offshore block in Saurashtra Basin, and that's the news flow we are getting to understand on ONGC. Back to you.
So, lots of stocks to watch out today. Thanks, Varun, Sharad and Srishti for taking us through all the stocks that we need to keep on our radar this morning. So, those are all the stocks we will be tracking. But there are several cues also that we need to be watching out for. Now, Snehi is joining us with all the cues that the market will be keeping a close eye on in today's trading session. Let's listen in.
Well, yes, lots of cues to watch out for. Not much happening on the macroeconomic front back home, but globally lots is happening. Let's first take a look at what to expect from Wall Street. From the US US market, you have merchandise trade, conference board consumers confidence, job openings, as well as, more importantly, the two-day Fed meeting beginning. So watch out for that. From Eurozone, you have consumers' inflation expectations. So watch out for that as well. In terms of global earnings, all eyes are going to be on Barclays, Visa, L'Oreal, and AstraZeneca. So across sectors, you have some heavyweights coming out with their numbers. In terms of quarter one earnings back home, three nifty companies, namely Asian Paints, L&T, NTPC, will be out with their earnings. But apart from that, a whole host of companies from the broader end of the market, like Star Health, V-Guard, Greenply, Deepak Fertilizers, Varun Beverages, Piramal Enterprises, Dilip Bilcon, so many stocks to watch out for. So keep a close eye on all of these stocks as well. In terms of AGMs, Happiest Minds, Borosil, Aadhar Housing Finance and IDFC First Bank will be in focus. And lastly, in terms of some corporate action and board meetings to watch out for the stocks of Piramal Enterprises as well as GMR Airports. Their boards are going to be mulling fundraising, and along with that, it's also going to be names like Alembic Pharma, Punjab and Sindh Bank, and SRF that will be trading ex-dividend. So watch out for all of these cues very closely.
All right, with that, it's time for us to slip into a short break. But you don't go anywhere. After the break, we'll get you more updates and news to watch out for before we start trading on D Street. Negative bias for Indian markets as well. Now remember, we are seeing a correction in the Indian markets. We have been underperforming, and today also it seems like no different. We do see cuts of almost 40 points at the open for Nifty is what we are penciling in. But Asian markets also no positive cues coming in. It's a sea of red. In fact, as of now, Japan's Nikkei is sitting with cuts of almost more than 0.5%, 0.6% cut coming in on Nikkei. Topics also lost almost 0.7%. Kospi fell almost 1% or so. Kosdaq has slipped 0.8%, and Australia's S&P and ASX 200 lost 0.4%. So there's a sea of red coming in on Asian markets. Now remember, we are awaiting the trade deal coming out as far as US and China is concerned. On the back of that, all the markets have are correcting right now, all the Asian markets. In fact, we also had the statement coming out from Trump, the fact that globally the baseline tariffs are likely to be anywhere between 15 to 20% range. So that baseline has already been set according to Trump, and now the countries that are likely to strike a deal are going to be somewhere thereabouts, or that 15% is a minimum baseline that Trump has set for the country. And remember, China is going to come out with a deal with the US very soon. So on the back of that, all the Asian markets are waiting and watching out and are trading in the red. So a negative start is implied for Indian markets as well, Kanishka.
That's right. So a negative start is what is looking like for the Wall Street as well. But let's shift focus to something very important. Now, the beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important for us to plan our investments. And to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative that is Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. So as part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. Well, on that note, we'll take a very short break on this edition of Market Cafe. We'll be right back with more on the other side.
मॉनसून आएगा तो बारिश बरसेगी और हुंडई शोरूम आओगे तो डील्स बरसेगी। वैसे लोग तो हुंडई चाहे दिल की सुनो या डील्स की।
When the stakes are high and the answers are elusive, there's one voice.
Us with the details of that data. Varun, take it away.
Definitely. So it's a 10-month low for the IIP number, which has come at around 1.5%. People were expecting it to come at around 2.5 to 3%. So there is a sharp decline in the overall IIP numbers, and this has been basically impacted by the electricity and the mining sector. If you look at the mining sector, the overall decline has been around 8.7%, and this is the lowest reading in almost 5 years. Also for the electricity, if you see, it has contracted by around 2.6% on a YOY basis. Although the overall manufacturing sector that has shown a good growth of around 3.9% on a YOY basis, and the sector has recorded better performance in almost 14 components have recorded positive growth. Only 8 sub-components have actually recorded contraction. If you look at other points, the growth in manufacture was led by actually infra and construction goods, wherein the overall growth has been around 7.2%, and the intermediate goods that have grown by around 5.5%. Also, the consumer non-durable segment that has contracted for 5th month in a row, declining by around 0.4%, and also the consumer durable growth that has actually come down. It used to be in double digit, now it has come down to around 2.9%. The rural demand that is holding up, but if you look at the overall urban demand, it is actually softening, and the overall private capex is also softening. Also, one point of worry is that the sequential momentum that has come negative 2.7% compared to minus 2.4% last year. So that shows further overall slowdown in the economy. So it's not a good number for the IIP number, which has come at around 10 months low, and the most shocking is the mining activity that has declined by around 8.7%, and this is almost at a 5-year low level.
All right, so an IIP number coming in at a 10-month low with the mining sector showing a shock. But in fact, we also discussed the IIP data, that is the June IIP data, with experts. Let's go across and listen in of what about what they are making of the numbers.
The manufacturing side, of course, growth has inched up from where it was in the month of May. If you look at the 8 core sector data, the growth that we've seen this time in June in sectors like steel and cement, again, have been very, very good, right? So I think there are mixed stories at present, if I look at cumulative sense of the IIP numbers. But of course, at the headline level, I think things are seeming much more moderate than where we were last year.
Infrastructure and construction, the numbers are aligned. We've actually been surprised more by the capital goods number, because last 2 months it was clocking 14%. This month it's clocked only 3.5%. I would agree with Sakshi. There is base effect. Maybe the government capex pull up. We don't have the June government capex data till now. The fiscal numbers will be out on 31st. So maybe the pace of spending slowed down in June compared to high double-digit growth clocked in April and May. So which is somewhat weighing on capital goods IIP this time.
Let's turn our focus to India's economic strategy as Finance Minister Nirmala Sitharaman underscores the critical role of capital expenditure, or CapEx, in driving the nation's growth. Speaking at a recent event in New Delhi, Sitharaman emphasized that public capital expenditure remains a cornerstone of India's economic momentum, calling it a primary driver of sustained growth. Sitharaman stressed the need for balanced growth, job creation and strategic trade policies to secure India's leadership on the global stage. Let's listen in to what the Finance Minister had to say on CapEx importance.
Prime Minister's clear instruction that you have to have the capital expenditure grow and grow significantly, and I confidently believe, based on the data before me, that is one of the primary keys, or one of the primary drivers of sustained economic growth. It can be higher, no doubt, but the level at which we've maintained is largely on the back of public capital expenditure, and that which is growing every year.
All right, so that's the latest word coming in from the Finance Minister about capex in the country. But let's go across and get some expert views as well from Ashish Chauhan on the banking sector. Let's listen in.
Broadly speaking, I think banking system in India overall also, even as a leverage, although many people, many economists see only India on across time zones and say that we have now more leverage at the household level, and that's why we might not do so well. But the rest of the world is immensely leveraged. I mean, Chinese banking system is now, or financial system is almost 4:1 leverage, whereas India is actually half compared to GDP, or probably 60% of GDP. So we are way low leverage overall, and that also gives them, or the banking system, an ability to finance India for all the growth that is coming.
All right, after a fiery day one in the Lok Sabha, the spotlight now shifts to Rajya Sabha for Operation Sindhu debate, where Amit Shah will lead the NDA's charge, while Rahul and Priyanka Gandhi are expected to speak from the opposition bench. Besides that, in a major reprieve, Indian nurse Nimisha Priya's death sentence in Yemen has reportedly been overturned as per the Office of India's Grand Mufti. This comes after her execution, which was originally scheduled to happen on 16th of July, was halted temporarily just a day earlier.
That's right. External Affairs Minister S. Jaishankar has asserted that at no stage in our conversation with the US was there any discussion about trade, and clarified that Trump did not call Prime Minister Narendra Modi during Operation Sindhu. All right, then moving on. In a rapid-fire press briefing alongside UK Prime Minister Keir Starmer, Donald Trump made a flurry of trade announcements. He hailed a new UK trade deal, saying, and I quote, "It brings us closer together," and also shortened Russia's Ukraine peace deadline to 10 to 12 days, warning of fresh penalties. On the economic front, Trump said that pharma tariffs are coming soon, with a push to make pharma ourselves. He also is mulling 15 to 20% tariffs on other nations, and pledged that the US will produce its own steel and aluminum again. The US and China are back at the table, this time in Stockholm, holding over 5 hours of talk to extend the tariff truce by 90 days. With the deadline looming, both sides are pushing to avoid a trade collapse that could roil global supply chains. The meetings, led by US Treasury Chief Scott Bessent and China's Vice Premier He Lifeng, could pave the way for a high-stakes Trump-Xi summit. China is hoping for tariff relief and fewer tech export curbs. And Taiwan's President Lai Ching-te is holding off a planned U.S. stopover amid delicate U.S.-China trade talks. Reports say Lai's August trip, initially floated to include New York and Dallas en route to Latin America, is being delayed until later this year, partly due to extreme weather in Taiwan and the high diplomatic stakes. With Trump courting a trade deal with Xi, any Taiwan-related move risks provoking Beijing. Next up, Donald Trump is dialing up pressure on Putin, shortening his original 50-day Ukraine peace deadline to less than 2 weeks. Speaking in Scotland with UK PM Keir Starmer, Trump said that he's disappointed in Putin and warned of sweeping secondary tariffs on Russia's trade partners if a peace deal isn't struck soon. A formal announcement is expected within days. Next up, JP Morgan is sounding the alarm on fintech data overload. In June alone, it received nearly 1.9 billion API pings from data middlemen like Plaid, but just 13% were actually customer initiated. The rest were unnecessary traffic for product tweaks, fraud checks, or even data harvesting. Now, with volumes doubling in 2 years, JP Morgan argues it is putting the infrastructure bill while fraud claims climb. The bank now plans to charge for access, triggering a backlash from fintechs accusing of anti-competitive behavior. Next up, Paris Hilton just made real estate headlines as she snapped up Mark Wahlberg's former Beverly Hills mansion for $63 million, topping LA's luxury sales chart in June. The 30,500 square feet estate had sold for $55 million last year, a quick flip that still beats LA's mansion tax. Now, wildfire displaced buyers like Hilton and a return of wealthy Chinese investors are now fueling LA's ultra-luxury market. All right, so that was the top global news. But with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you more updates from the Indian market. Stay tuned.
A
मॉनसून आएगा तो बारिश बरसेगी और हुंडई शोरूम आओगे तो डील्स बरसेगी। वैसे लोग तो हुंडई, चाहे दिल की सुनो या डील्स की।
When the stakes are high and the answers are elusive.
Than what we were expecting, but if you look at the profitability of the company, that has come at around 604 crores. We are expecting it to come at around 715 crores. Also, if you look at the net interest margin of the company, we are expecting it to come at around 3.2 to 3.4%. It has come at around 3.46%, which is better than what we were expecting. But if you look at the overall asset quality of the company, that has deteriorated more than what we were expecting. It has come at around the GNPA number 3.64%. We were expecting it to come at around 3.1%. And also, if you look at the net NPA numbers, that have come at around 1.12%, which is far ahead of what we were expecting. Overall, the provisioning have also gone up by around 68%. There are brokerage houses who have slightly raised the overall target, like Motilal Oswal. They have a neutral call. They have slightly raised the price target from 800 to 830. They say that the overall operating metrics remain stable after the Q4 reset, and also the business growth, if you look, that has remained a little bit muted. The management has said that the vehicle finance demand is expected to remain muted, and Motilal Oswal actually raises the overall earnings estimate by 2.6 to 2.3% for FY26 and FY27. They say that a key monitorable would be the new CEO appointment and the business cycle recovery. Also, you have a Nuvama note. They have a reduced call on IndusInd Bank with a price target of around 600. They say that the overall net NPL uptake is actually a problem for the company, and the overall they have actually reduced the overall price target by maintaining around 600. So it's a neutral call. It's a reduced call by Nuvama and also a neutral call by Motilal Oswal. But yes, Motilal Oswal has slightly, uptake the overall price target from 800 to around 830 rupees.
All right, thanks Varun for taking us through the fine print of IndusInd Bank and also what brokerages are making of it. But moving on to some counters that are yet to report their earnings and will report later in the day. Now, the largest paint producer, that is Asian Paints, that is all set to report its Q1 numbers today with volume growth in its core decorative paints business projected to stay in the positive territory. But what else is the street penciling in? And now let's go to Rabinder to get us a roundup of all that.
Well, Asian Paint is set to announce their Q1 FY26 number, and Street is estimating a revenue at rupees 8,989 crore, which was flat year-on-year basis. And if we talk about PAT, then Street is estimating a PAT rupees at 1101 crore as compared to 1170 crore, which was down by 6% year-on-year basis. And if we talk about EBITDA margin, then Street is estimating a EBITDA margin at 18% as compared to 19% in Q1 FY25. So overall, another modest quarter for Asian Paint. If we talk about volume growth, then Street is estimating a volume growth at 3.5% to 4% as compared to actual volume growth of 7% in Q1 FY25. And pricing continues to be negative due to an adverse mix and down trading, and analysts are estimating a B2B segment to grow in double digit due to a promising capital outlay, and growth remain muted in Q1 as demand condition has not seen any meaningful improvement, especially in urban markets, and Asian Paint has a high exposure in urban markets. And if we talk about key things to watchable for, first is management commentary on the recent acquisition in the paint industry, commentary on demand outlook and gross margin trends.
What the street is expecting when it comes to Asian Paints numbers. But L&T is the other counter that is going to report its earnings later in the day, and as per our ET Now poll, it's going to be a rather solid quarter for the company with revenue that is expected to come in at 62,950 crore rupees. That's up about 14% when compared to the last year of the same quarter. EBITDA that is going to come in at 6,391 crore rupees, and that also is likely to go up by about 14% as per our poll. Margin that is expected to remain steady at that 10.2% level, whereas the net profit that could come in at 3,389 crore rupees for the quarter 1 of FY26. Now remember, while we are expecting a very strong quarter when it comes to a comparison on a year-on-year basis, on a quarter-on-quarter basis, it may not be as good. It is going to be a soft quarter when compared sequentially on a high Q4 base. Now, let's take a look at what the order book could look like. Now, as per Nuvama's estimate, the company has witnessed an order inflow of about 38,000 crore rupees in the first quarter of the current fiscal. which is likely to take its order book to 5.5 lakh crore rupees. Now, some of the key factors that we need to watch out for from L&T's results is the growth led by projects and manufacturing. So that is something that's going to drive the growth for the company. And like I said, Q-on-Q decline is likely on a high base. Something else that we are going to watch out for is the management's commentary on margin outlook, the order momentum execution, and also the pace of execution as far as orders are concerned, and the latest update on Hyderabad Metro project as well. So we are expecting a strong execution as far as Q1 is concerned, but the trajectory going forward is something that we are going to watch out for. So that's how that's what the street is penciling in for as far as L&T Q1 numbers are concerned. Ankita?
All right, so lots happening as far as the earnings are concerned. That is what we need to watch out for as far as L&T is concerned. But a couple of, other big names that are joining us on the back of earnings, and a stellar lineup lined up for you as far as the market is concerned. At 8:35, we have Shri Amarendra Prakash, the Chairman and Managing Director of Steel Authority of India, or SAIL, on the back of the Q1 earnings that SAIL has come out with. At 9:50, we have Jitendra Goyal, who's the Chief Investment Strategist of Kotak Alternative Asset Managers, to weigh in on the markets and the way forward. At 10 a.m., we have Ajay Joshi, the chemical industry expert, to talk to us about the trends in the chemical space. And at 10:15, we have Devadatta Chand, who's the Managing Director and CEO of Bank of Baroda, again on the earnings front and what would be the roadmap ahead for the bank.
All right, so those are that's the lineup as far as the market is concerned. So stay tuned to ET Now. Very important conversations coming up next. But for now, all eyes are on the NSE IPO. Now let's go across and listen into what Ashish Chauhan, the MD and SEO of National Stock Exchange, had to say about the IPO timeline.
We are still awaiting the no objection certificate from SEBI. Once, because we are a regulated entity, we need sectoral regulators no objection certificate. Once that comes, it'll take us a couple of months, probably 3-4 months to create our RHP, and then we'll again submit to SEBI for their approval for the RHP, which will take another 3-4 months. So for me, it's still far away.
Next year ho jayega.
Yeah, it's still far away. In some ways, the jobs which I have done most of my life is to act as a regulator, as a service provider of very critical infrastructure in India. And that makes you a little immune to day-to-day ups and downs, but you need to be there every moment. Things have to work. The life, people will be excited, people will have the sorrows, people will have joys of making money, losing money, things like that. But you need to ensure that the system continues working without being emotional. And that's
How do you keep your equilibrium?
Not to get involved in the stock markets. In terms of whether invest, I do still invest in ETFs and all, but a very small portion of my wealth. Most of my wealth is in some ways on FDs or real estate, because that at least doesn't move much, and I'm not allowed to trade in stocks because of the job I have.
All right, with that, it's a wrap on this edition of Market Cafe. Tanishq and I will take your leave. Thank you so much for joining us, but don't go anywhere, because the market takes the market action forward and all the lineup that we have in store for you.
What is the message, Ashish ji, for retail investors? They get affected by the noise, and they also get affected by the lofty valuations.
In a growing economy like India, there will be worries about valuations. But effectively, when a country is growing very rapidly and is expected to grow even more rapidly in near future or longer term future, people do give you larger price earnings.